Hello everyone, welcome to Property Portfolio. I'm Shmiti. We are covering the topic of loan and mortgage today in our episode, and I'm joined by Mr. Sachin Pathak, who is also a mortgage advisor. Sachin, lovely to have you with us in our show. Thank you so much for coming today.
Thank you so much for inviting me.
Pleasure. Sachin, so without wasting any more time, let's get started with our topic. I believe arranging the finance is the first step if you want to buy a dream home or even if you want to purchase land in property market, right? So with the experience, could you give us more information on, first of all, what is loan in property market and what qualifies one to be able to apply for such loans?
So Smriti, there are loans in terms of buying property. There are a few different types is first home buyer, investment loan. Those are the things. So before anybody goes to real estate or wants to buy something, he should make sure that he has borrowing capacity to purchase home and land package. There are two ways, like bank normally lends up to 95% loan, up including mortgage insurance. So the client has to bring around 8% deposit, 8 to 9% deposit plus stamp duty. Depends on the land cost and things like that. So that's the criteria for buying the post home buyer or who wants to purchase a property in home and land package. If somebody is an investor, he wants to bring at least 12% deposit plus uh, stamp duty costs required to purchase any home and land package actually. And what qualifies for the loan? Basically job, like somebody who husband and wife working or single person working, or he could be a self-employed person running his business successfully for many years or at least minimum 2 years. That person should be running a business, and then he can approach myself, and then I can look into his finances and to help out. Yes, he can, what he can borrow basically in terms of if he wants to buy home and land package.
All right, Sachin, and is there any sort of a difference, like if someone wants to buy the land and house package or someone wants to purchase, let's say, duplex, in terms of the amount that we need to deposit to move ahead with this purchase or investment? Is there any difference in these two criteria?
Not really. Bank doesn't look at that. If somebody wants to purchase a duplex house or a independent house, in terms of deposit criteria, is the same thing. So bank doesn't check. Bank doesn't want to know that okay, he's buying a duplex or something. So deposit criteria is same, and the what is that land and construction also, like deposit same, like 8%, nearly 8 to 9% for first time buyers, 12% for investors.
Okay.
Basically, that's the deposit doesn't change for in terms of buying a duplex or independent house. The only thing might change in terms of buying a duplex. If somebody is buying a duplex house, he might have to pay the stamp duty on the full completed duplex house because it's not a split contract. It's only a one contract. In home and land packages, there are two contracts. So client normally pays the stamp duty on only on the land components, not on the construction component. But in terms of duplex, he might have to pay the stamp duty on the full purchase cost. So that's the only difference actually for the client.
All right, thank you, Sachin, on clarifying us about this. And also moving ahead, so when someone approaches you as a mortgage company or who would guide clients for arranging their loans and mortgage, could we know like who are your lenders and how many lenders does one mortgage company generally have with them?
So normally any broker, like for myself, I have all the big banks and first tier, second tier, and third tier lenders. So there are three types of lender in the market. All major four banks. Then there are second tier lender like St. George, Bankway, Sunco. And there are third tier lender like Pepper, Bluestone, Latrobe, and those sort of stuff. So there are three layers of lenders. Basically each lender has their own lending policies. As a broker, when anybody comes to me for a home loan, I need to see which lender is suitable for that person. What, like, like buying a home and land package, not every lender is allowing 95% loan and construction. Only few lenders are there who lend 95% including mortgage insurance. So basically constraints happen. So it's a case by case basis that which lender we're gonna go. Particularly if you talk about myself, I nearly have around 35 to 40 lenders in my panel where I can go and do my assessment, talk to the bank and see where this client can get the loan from.
Yes, all right. Thank you, Sachin, once again for clarifying this. So, Sachin, once again, moving ahead, you know how when someone applies for a loan, they have the interest rate on it, and they also have the option to lock in that interest rate. With the experience as a mortgage advisor, do you suggest our clients or anyone who is applying for loan to lock in their interest rate?
So locking interest rate before you, like when you make an application, I just want to clarify one thing that there's a fixed loan, variable loan. This component is there, and locking a rate is also a different part. So locking a rate means is just a temporary solution. Like say if a bank offering 2.50 rate of interest and you want to lock the rate, so the bank normally charges $500 to lock the rate. In terms of that is good when if you feel there is a rate of interest going to change before the settlement happens. So that time, if you lock the rate will not change for you. Bank will still give you 2.50 rate. That's called locking a rate actually. So that is same with the fixed or variable part. You can lock the rate or you can lock both the rates. So bank charges fees for locking the rate. That's one component. And
And what
fixed.
about in terms of, let's say, sorry to cut you, what about in terms of, let's say, in duplex, if someone wants to, lock in rate in terms of duplex loans, is that the same rule there as well, or is there any changes that we might have to keep in mind?
No changes. Basically, it is same rule. If you want to lock the rate, you just have to tell that yes, you want to lock it. There is a separate form for that one. Each bank has one. When you apply, you just say I want to lock the rate for this much, and the bank charges you that fee, whatever the fee is for that particular bank at the time of settlement. So doesn't matter if fixed or variable, like duplex loan or establish or it's a home and land package, it's the same process.
Yes, Sachin, and also let's say if some investor want to, in terms of talking about duplex again, let's say some investor want to invest in duplex, available duplex with us. With the experience again, would you advise them to, what would be your advice actually to them in terms of interest loan and in terms of even approaching you for loan?
So buying a home and land or duplex is the same as I mentioned previously. Deposit requirement is same. Only stamp duty cost might change because depends. It's not a split contract. The If investor wants to buy something as a duplex in terms of home and land package, he just need to work around that how much money deposit he has and the stamp duty cost. That's it. Rate of interest doesn't change. Only as I mentioned previously, rate of interest only changes if you paying the 80% 20% deposit, 10% deposit, or 5% deposit. So 80%, 90%, or 95%, what category you are taking the loan. Based on that, your rate of interest actually changes depending on the LVR. Actually, that's called LVR, loan to income, loan to mortgage ratio. So that's uh, rate of interest changes for the investor or first home buyer.
All right, okay. Thank you, Sachin. And to the viewers who is watching our show, thank you for being with us. Also, please keep in mind all these information that we are providing is a general information, so it is not sort of targeted to particular individual. But again, if you want any specific information or suggestion that is focused with your situation or scenarios in terms of applying for loan or mortgage for land and house package or duplex, please feel free to contact us and we will be here to help you and guide you in the right path. Sachin, so next question for you is we hear the term LMI. So could you sort of clarify a little bit to us what does LMI mean?
Okay, LMI has one word like lender mortgage insurance. That's one term. So that's a full form of LMI actually. And what LMI is, if the client is not paying 20% deposit towards the purchase of the property, then he has to pay mortgage insurance. That is lender's mortgage insurance basically. And if LMI actually over 80%, it gets add up by every percentage you add actually into that one. So client is paying 10% deposit, 12%, 13, 14, 15 like that up to 20%. So higher the deposit, lower the mortgage insurance. So that's a simple fundamental of mortgage insurance. So it's mortgage insurance client, it's for covering the bank. It's the bank insurance. If you default on your loan, they are securing themselves basically. That's why they are taking that loan, that mortgage insurance from you guys actually. And 95% like bank, if you accommodate loan up to 8%, then you like 95%, the mortgage insurance can go up to $27,000. So it depends on the valuation and depends on the deposit you have. But in nutshell, if you are taking loan more than 80%, you have to pay mortgage insurance.
Okay, and Sachin, what about the residential loan and commercial loan? Is there any sort of differences when we apply for loans in terms of residential or commercial?
Residential loan is different than commercial loan. In residential loan, you can get a loan up to 95%. Bank can give you that much, and the rate of interest are very lower, like around at the moment it's 1.9% or 2%. In residential loan, it's different. Normally the banks require 20%, minimum 20% or maximum 30% deposit. That's minimum as bank to bank changes. And the rate of interest is also higher, nearly around 4%, or some banks charges also 5% rate of interest. So for residential loan, simple, can go up to 95% of purchase price. Commercial loan can go up to maximum 80%, and the rates are higher too. And there are some constraints that normally lender wants to see if that commercial property is already rented out, it's leased already going on that rental property, a commercial property, then the lender actually gets more easier. Otherwise there are other criteria that we need to fulfill actually.
Okay, and Sachin, moving forward again, in terms of let's say focusing to investors who is willing to invest with us or watching this show, with the experience, could you please give us a little bit more information on if someone wants to apply loan for as an investment property, how does equity come in this scenario? Could you explain more about equity as well, please?
Yes, so equity is a very good component owner occupied people have. If you have a one house or if you have one investment property, doesn't matter, you can use your equity to purchase the next house. You can use part of that equity. So up to 80% of the purchase price, you can draw down the equity. So in example, if I want to give you, say if the client have the home loan of $500,000, current loan amount on his owner occupied property is $500,000, and valuation for his investment property comes up to $900,000. So that's 900 into 8 is 720. So he can withdraw up to $200,000 equity from his own owner occupied property to purchase the next property based on his borrowing capacity basically. But if he has a good borrowing but don't have the deposit to purchase next property, then he can use the equity to purchase the next house actually.
Okay, sounds good, Sachin. And also, I have one final question for you for today. So again, you have been in this field of helping clients with loan and mortgage for years now. So with your experience, what are your suggestions to anyone who is looking to apply for loan and mortgage, be it for their land and house package or duplex, or be it for residential or commercial? What is your like one good advice, let's say, for viewers out there?
So I want to clear one misconception is out there, which is stamp duty. So stamp duty cannot be added into the loan amount. It is a separate component that client has to pay out of pocket. So purchase price plus stamp duty costs. So that is two different things. So means if the bank doesn't allow to add it up in the loan amount actually. So that's I want to clear that one part actually in that one. Uh, for owner occupied or investment doesn't matter. Purchase stamp duty is the completely separate cost for the purchaser actually. I also want to tell our viewers that those who are partially first home buyers, which is a key point I seen in when lender look at it, when they want to purchase a property, make sure you guys have 5% of genuine saving saved into your account. It's genuine saving means money saved over the period of time and sitting in the account minimum of 3 months. The
Okay.
bank is very particular looking into this stuff. Those who are purchasing the property of 95%. I've seen many people at the moment bringing money from overseas, borrowing money, things like that. But if they do that, the question is uh, the bank will ask questions about that. So genuine saving of 5% is very important when you're applying the loan.
Thank you, Sachin, once again for your valued time and your information regarding loan and mortgage today. I believe with your answers we have helped few clients or viewers to ease any questions they had in their mind. To the viewers which watching this show, thank you once again for being with us from start to the end. If you have any question related to property market, please feel free to approach us and our professionals will guide you in the right path. I'll be here again next week covering different topic. Till then, please take care.
Thank you, Smriti. Thank you so much for inviting me here. Please feel free to contact Metro Homes. We are there to help you from start to end. We can help you find the right location, right package, and right deal for you. Thank you so much once again. Thank you. Bye bye.